for the majority of this year, until recent months, China FX has also been a very favorable carry trade, being the funding currency, because actually you get paid to short the Chinese RMB. And if you are bearish on the growth, then this trade again aligns very well with the investment view. So that's the Chinese onshore government bond market, but actually there's other market in China, fixed income, that offers opportunity. So the first one being the investment grade corporate market in China. Actually, it is a very, in terms of the asset class, it has been attracting very sticky demand. And we call this reassuringly tight, because there's not a lot of juice in there in terms of valuation. But if you look at the government policy, right, it is really not about the nominal GDP growth number. It is really about a targeted industry where the government really cares about. So that's your AI, that's your media, that's your technology. And then actually, so I'm talking about like a Meituan, Alibaba, Tencent, right? So actually, again, these are the industries that the government wants to protect and want them to do well. And then the bonds all fall into this investment space, investment grade, and they have been trading very well, attracting inflows. And the last but not least, if we want to talk something a little bit more spicy, is the Chinese high yield bond market. Actually, right, so this is very bifurcated, because within the Chinese high yield bond markets, there are bank bonds. Actually, they're very high quality, but they're just lower down in the corporate structure. So they're actually trading very expensive. Then on the other hand, we know the Chinese real estate bonds, but I think the majority of those bonds have exited the universe because they've defaulted. So we only have very few left. So in the Chinese high yield bond market space, it's really a more bottom-up story. We'll have to dig a bit deeper to look for opportunities case by case.